Welcome to today's morning report analysis videos on Wednesday the 10th of October with me, Rich Market Analyst at Hantec Markets. Let's look at what is driving markets today, and there is a degree still of risk aversion, not so bad as it has been previously. The dollar slightly sort of consolidated its recent run higher. In the last few sessions it's actually sort of tailed off a touch. And that's interesting to see that as the Treasury yields have just sort of calmed their advance, although the 10-year is picking up a shade again today. It's back still from the 326 level that it was yesterday, 322 at the moment. Markets is also looking towards how Italian bond yields move. Now, Italian yields have been in focus, obviously, with the Italian budget situation going on, the wranglings between the EU or the European Commission and the Italian government. And Finance Minister Tria yesterday saying that pretty much having his Mario Draghi moment, or trying to induce that by saying that they would do pretty much whatever it would take to prevent a massive deterioration in bond yields. And what we have seen is the Italian yields coming a bit lower, and that's helped to provide a little bit of support for the euro. Brexit is continuing to dominate how sterling moves, and that is meaning that we're seeing a little bit of an improvement in sterling on the cable, as suggestions are that the EU and the UK side are not a million miles away from agreeing some sort of deal that could take them forward. And that sort of helped to support sterling in recent days, about sort of 200 or so pips up from the levels of last week. In terms of equity markets, again, that the DAX has sort of fallen over a touch. It rallied into the close and fell over, but FTSE 100 is my chart today. I'll talk about that in a bit. But there is a slight sort of mixed outlook across forex majors today, and again, the dollar is just sort of taking markets a little bit interestingly, as Treasury yields have just ticked higher in the last few minutes, so the dollar's just gaining a little bit of traction off the back of that. But generally speaking, it has lost some of its traction in recent days. Now, in terms of where we're looking at on data points, we've had UK data out today, shade mixed really, nothing too sort of significant really. You had a touch lower on the year-on-year data on the GDP. In line on the monthly, month-on-month flat, but we had an upside revision to the July data, so that's why we were flat on the month. And subsequently, we're also looking at the trade balance, which deteriorated a shade to 11.2 billion pounds, that is. Now, this afternoon we've got the PPI for the US PPI data, and that is expected to just basically remain as is on the headline, shade higher on the core to 2.5%, but that is the main data points today. Now, my chart today, FTSE 100. Now, I think FTSE is quite interesting because we had a pretty decent rally into the close on FTSE, arguably a bull hammer, but not sort of perfect bull hammer. But you also did see what could arguably be a false downside break of that break of 72.20 yesterday. Now 72.20, you could argue, still comes back in as a base of support. 72.15 today being the reaction low before the market picked back up a shade. It's only sort of 7-8 ticks down on the day. You can see that on the hourly chart, you have broken that downtrend. Momentum indicators giving sort of near-term recovery signals, crossing higher on the MACD, stochastics, but it needs to sort of build this next level of support, I think, above yesterday's low. Now 72.20 area would be ideal if the market sort of pushed back above 72.48, which is yesterday's rebound high. Then you could start to see a recovery at play, but what we need to see is a little bit more coming through on FTSE. But yesterday, that rebound off the low, that with that positive candle after three such enormous strong bear candles in a row, that suggests that perhaps a degree of exhaustion maybe was seen with yesterday's low at 71.84, so that's an interesting support to now watch. In terms of momentum indicators, there is still a sort of a corrective look to them. RSI 33, so not a million miles off the lows or the levels where you start to see a turnaround, but stochastics need to pick up, MACD lines need to sort of stabilise, and I think moving above yesterday's high, 72.48, would certainly start to help. Certainly if it was today, that would be a bull candle again, second in a row. We might start to see some traction building, but it'd be interesting to see if that was an exhaustion now at 71.84. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.